Sandra, for joining with us. First of all, could you clarify what are the reasons why IMF adjusts Vietnamese economic growth prediction from 5.8% to 5.2%?
The main reason why the IMF has adjusted the forecast down is because compared to the time that we made the previous forecast, the reform in the economy has been slower than we had expected. Many people have said that. The National Assembly has said it. Many people in the market have said that the reform has been a bit slower. At the same time, the situation of the enterprises and the banks has also been a bit weaker than we had expected when we made the prediction earlier. Enterprises are still facing large inventories. Demand has been much weaker than we had thought. There are still continuing problems in the real estate sector. So in a number of areas, domestic demand has been weak. At the same time, there are still weaknesses in the banking sector. So credit is not flowing through the economy. We have seen that credit growth in 2013 also is still quite slow. And the reasons for that are both from the demand side and the supply side. Banks are still hesitant to lend to enterprises because they don't know how the economy is going to behave. And enterprises, good enterprises, are also still hesitant to borrow because they don't know how the economy is going to be, and they still have too much debt from the past that they took. Also, they are carrying very large inventories. So in the banking sector, reform has been slow. Enterprises are finding it difficult. The reform of the state-owned enterprises also has been much slower than the government said it wanted to have. So those are the reasons that we decided to reduce the forecast for Vietnam for 2013.
Yes. Although we have a lot of problems to solve, but in your opinion, what are the potential for the growth of Vietnam in the coming time?
I think the Vietnam already has significant advantages. I mean, it has a demographic advantage. It has a population structure in which there is many more younger people. And when you look at Vietnam compared to some other countries where populations have become older, say in Japan or perhaps even in China, Vietnam still has a lot of people entering the labor force. It's a question of those people being involved in high-paying jobs. So their skills need to be higher, and Vietnam is a very important part of the supply chain in the region. Things are made in Korea, Vietnam, China, so on and so forth. So better skills from the labor force so that Vietnam gets a larger part of the contribution to the value chain. That is important. At the same time, these are conditions in the global economy where interest rates are low. So a lot of money is moving around the world to get good returns. And capital moves to countries in which macroeconomic conditions are stable because that's what people want. So retaining the macroeconomic stability that Vietnam has achieved in 2012, inflation has come down. The exchange rate was very stable. International reserves went up. The continuation of these conditions in 2013 will make Vietnam very attractive for foreign investors, where returns in other countries are lower, but returns in Vietnam are still high. But retaining macroeconomic stability is very important for that. Vietnam is still a country in which many other advanced countries or mature economies in the region want to invest. We've just heard the news of a very large investment by Samsung, for example. These are the kinds of investments, large investments that Vietnam should aim to get. And for all of these, I think reforms, again, are very important. Providing an environment in which the foreign direct investment can operate. Good infrastructure, good banking system.
IMF forecast about the world economic also not optimistic on this year and the year to come. What do you think this factor can affect on the Vietnam economy?
Well, first of all, overall the projection is not very optimistic, but it is improved compared to the last 6 months. So, for example, in the United States, some of the risks have come down. in the euro area, some of the big risks that people were talking about 6 months ago, for example, many people were saying that the euro area might break up. Some of those big risks have gone away. The advanced economies, the US, euro area, Japan will remain a little bit slow in the first half of 2013, but because a number of these big risks have gone away, we are hoping that conditions will improve quite quickly or significantly during the second half of 2013. In the case of Japan, we know that there's a very large fiscal and monetary stimulus that is going to be in place. So in the advanced economies, the big risks, what we call the tail risks, have reduced somewhat. Financial markets have improved. The recovery will be a little bit slower than what we had expected. But compared to 6 months ago, overall, the conditions in 2013 will be better than in 2012. What is the impact of these global developments on Vietnam? Vietnam is an open economy. It deals with foreign markets. It deals on the supply side and on the demand side. So to the extent that global conditions improve, it helps Vietnam. But in the case of Vietnam, there are some other factors. Global conditions were not so good in 2012, and yet Vietnam's exports rose by a very large amount.
Yeah.
And the reason for that was that there was a lot of foreign direct investment that came into Vietnam. So Vietnam has changed the nature of its exports from agricultural exports, and the traditional exports is now moving into electronics, for example. So a country does not necessarily need to depend on the global economy. It can do other things to improve itself so that its share in the global trade can increase. And over the last few years, Vietnam has been successful in doing it. Once again, it comes back to the kind of domestic environment that an economy has, the ability of an economy to deal with shocks inside and outside. So even if global conditions can be a little bit more difficult, countries, and in the case of Vietnam also, it is still possible to do well.
Thank you again.